Good afternoon or late good morning to folks that might be passing by on YouTube. Got ourselves a little bit of a sell down here on options expiration day. And if you have any questions, don't hesitate. I'm not going to bend your ear. We're watching at the moment Swing Machine Plus is the view that we now have up for just for you. I'm happy to look at it on a daily basis, any basis, and even show you some stocks. We'll let folks have a chance to find us. Um, we don't really advertise to speak of, and so we don't have thousands of followers, and that's just fine. It's a bit of a miracle that you found us for sure. And but I'm happy to answer any of your questions. And as we highlight just some of the trades being presented. Now we're asked all this, and I understand. It's like, well, Don, are you in every one of these trades? No, no, I never am. Swing Machine is presenting more trades than I have money for. I wish. And is presumably probably presenting more trade opportunities than all of our members all put together have money for. Just tons of opportunity. And it depends upon what one is trying to do and accomplish. There's you can't, and it is true. We do agree that you cannot control the market. We can't. But there are things that in life or in our trading life, anyways, that we can control. And recognizing what those things are, coming to grips with it, and then executing your trading on around your around what you can control is so important. We want to be able to build a swing, a trade swing that you can repeat and repeat under pressure. Up in Jacksonville, they're playing the TPC, which is a gorgeous, gorgeous golf course. I've had the chance to play it quite a few times, actually. Didn't play it real well, but got around okay. And but those guys talk about that. They want to be able to hit a swing and a shot that they can do over and over again. Now, it's not to say that, that the island green, they're going to hit, the same club every single day. They may have an expectation of yardage, but the conditions are going to be different from day to day during the course of the tournament, presumably. So you have to be flexible and have to be prepared to make adjustments on the fly. What we're trying to do is build trading tools that are consistent and objective in what they present to us and to our members so that they can gain confidence in these tools. And then, when they step up to the trading window, they can hit their shot with confidence. So let's just take a look at a few of those shots this morning. And now I am not saying that everybody is in these trades. I'm sure that some are, but let me highlight a few things here for us. And so we'll come in here, and the market has been selling down, which is really nice about Swing Machine. It's kind of trading, not kind of, it is. It's trading the here and the now, in the moment. Right? Golfers even talk about that. They want to be in the moment. They don't want to be thinking about the shot that they just left behind or the hole. Once they've played the hole, they've played it, they got to move on. So they want to stay in the moment. So at the moment, let's look at the ES. In fact, let's first look at the VIX. So the VIX 5-minute interval has gone long right here at 8:40 this morning. What is the VIX? The VIX gives us insight. Now, by the way, we have the percent return. We're going to show you that in stocks. We don't usually use this intraday, but you're seeing it, so I'll leave it there. I'll show you in a moment some stocks. The VIX shows us the option buying and the flavor of the options market. Now, today is an options expiration day. I'm fairly certain, and I don't have it wrong. and it can get pretty chaotic. In fact, the last couple of hours will be probably very chaotic. And a lot of times it's a watershed event too, especially if the market has run up, 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 and up and up into options expiration, as it has, or if it's run down, down, and down, it can be a watershed for the next quarter. So we are thinking that that this could be a watershed afternoon, early next week, as they start trading the June contracts in the June quarter. But the market told our members, if they didn't know it earlier, at 8:40, that the markets are likely to be down. So let's go look and see if we get confirmation of that. Well, at 8:20, which was 20 minutes before, the ES on a 5-minute interval, if we're matching intervals, did in fact go short at 8:20 at 5221.50. And for the last 42 5-minute segments, it's been short. So it's been short all morning. And if a member put that trade on with a mini contract, they are up $1,787.50. The margin required to hold that trade right here and now is about $1,900 at 9 o'clock, starting at 9. At 8:20, they would have had to have about $18,000. You would have had to have full margin on. But now that's all one would be required. Let's take a look at the NASDAQ 5-minute interval. What time did that go off? So the VIX actually responded to the markets. Sometimes the VIX leads and sometimes the VIX follows. And the NASDAQ went short at 8:15, just 5 minutes in front of the S&P. Isn't that is not a coincidence, folks. We point out the times all the time because the markets, in our view, have been commoditized. The S&P, the NASDAQ, the Russell, it's just a commodity. Just like, well, Bitcoin's not a commodity, but it trades like a commodity. Gold, silver, lumber, sugar, for the most part, they've been commoditized. Yes, you have individual stocks with individual stories and doing individual things, but for the most part, they're going to move either with the market a little bit better than the market, or a little bit worse, which we have tools to identify as well. The Russell, in fact, is fighting this because it's long, and it's been long since 1020, and it's kind of fighting it. In the end, they'll get them all, but we'll keep an eye on that. Here are the Dow futures, and they went short at 9:10. Now, by the way, back to the NASDAQ. Everyone likes to play the NASDAQ. We do too, because it's so rich, it's so volatile. A mini contract, you're up one mini, you're up 3,700. If you traded a micro, you're up $370. If you traded 10 minis, if you have that kind of firepower, and we have members that have that firepower and more, they're up $37,000. So it's all relative. The process is the same. It should be, it better be. So if you're out there like, I got my $5,000, and when I get to 25,000, that's when I'm really going to open it up. That's when I'm really going to really hit it. That wouldn't be the right approach in our view. No, because you might get yourself to 25,000. You might get yourself to 50,000. And if you haven't been honing a process that you can depend on, that you have confidence in, you'll give it all back rather quickly. And they count on that. So just want you to, we're all about process. By the way, you can see Bitcoin down in here, so not hiding it. Let's go take a peek at Bitcoin. I've got to come over here and grab the little cursor, see if I can drag it down. Here it is here. This is interesting. Now, this Bitcoin is, this is on a daily basis, right? I can put this into a daily too. This is a daily, and this is the multi-pack Bitcoin. This is 5 Bitcoins in the futures contract. So it's huge, huge. But you know what? Bitcoin players play with huge sums, right? Bitcoin went long on Swing Machine on a daily 34 days ago. So you didn't have to listen to, Michael Saylor and all those ass clowns. You could just have Swing Machine. And Swing Machine said to buy Bitcoin at 44,205 a coin. And if you had bought it in a futures market back on January 29th, yeah, you'd be up 55%, or in the futures, you'd have $122,000 worth of value. Now, if you bought Bitcoin and you're holding it in your wallet and you're hodling it, good for you. Don't sell it. Just that when Swing Machine goes short, you might want to short Bitcoin in a futures account to preserve the value you have of Bitcoin in your wallet. That I have no bitch with Michael Saylor or anybody wanting to hodl or, pile into anything. You know what? It's your money. You've earned it. You deserve that right. My only bitch with them is, and I know that they do this and they don't tell you, is that you should learn how to hedge that core position. Rest assured that the Bitcoin that those companies own and those big whales own, they most certainly, when Bitcoin turns down, they may not sell their Bitcoin, but they will hedge it in the futures market. And they never mention that because it takes a skill set that is probably beyond them, and they pay people to do it, and they're not going to be bothered. But Ethereum, I mean, we can sneak Ethereum in here too. Why don't we do that while we're here? Um, I think it's at ETH, and we'll punch it up. And so here's Ethereum. Now, I'm not sure how much leverage it takes to play Ethereum, but Ethereum went long 99 days ago. And you're up. Well, that's kind of crazy. We were recommending. Well, see, we don't recommend, right? So we don't go on YouTube and talk all day about Bitcoin and cryptocurrency or gold or silver or anything for that matter. We just don't do that. It's like what a waste of time that is. But so we're showing you the tools. So if you want to play those markets, fine. If you had this tool on your desktop, it would have told you on October 24th of 2023 to buy Ethereum at 1928. And if you had bought this futures contract, which I'm not sure how much leverage it is, but you'd be up about 89 grand. That would work. And if it tells you to sell it, maybe you want to get out. But let's scroll back up. We're not. I'm happy to. If you want me to plug in any of your stocks. In fact, what we did, we set up a little bit different. Now we do have a little program that's running behind the scenes. We got a number of programs that are running, and these trades can go in automatically too, right? They can go in with automatic alerts and all kinds of things. So I'm happy to answer your questions. We haven't been doing much on YouTube this week. It's just been so busy. I don't know where the weeks go. Jim Iorio, I just respond. I don't like a lot of the financial people, but he is a person that I really do like. I've never met him personally, but he's a really good person that I've followed for years. And he was talking about, whether or not one should retire at what age and what have you. And I don't know. I guess that's very individual, but my early career, my young career was teaching surgeons how to do surgery. I really, really enjoyed it. I really did. Couldn't envision doing anything else at the time, but I also knew that that was probably going to run its course. And then Susie has a technology background. We started to delve into, for our own purposes, trading in the markets using the latest technology and the best technologies and concepts. And it's just been beautiful, and it's developed into a whole second career of sorts. We didn't set out to build Stock Market Caddy, though. You may or may not know that we didn't. That came about 10 years after the fact, just because we were bored. I was a little bored, or a lot bored. So you should know that. But so you want to see, I usually at this stage ask people, do you want me to plug in some of your stocks? I'm going to show you. I've got it set up. I think I can have this. All right, so let me clean up some of the Zoom features here. There we go. Not too much. Now I'm gonna clean off some of those. That's some of the Zoom writing, that these little brackets. All right, so let's just get this set up here for you so you can see this. And now this could be sitting on your desktop. Could be. So we will show this every night, but just watch this. And we're going to do the S&P 500 and the NASDAQ completely. And then ask yourself, where would I be? Maybe we go slow enough, we can look out if you don't see your stock. Where would I be if I had this tool on my desktop and if I had used the tool? So here's the symbol. Here's the interval. This is assuming a daily. We can ultimately change it. This is the signal, long or short. By the way, this is not using moving averages, right? It doesn't. This is the age. We have the time. You might say, well, why do you do that, Don? Can't you look at the time and the date? We can, but we kind of want to know shorthand how long the trade has been on. So the signal age in bars, the interval is a bar. So the interval, this would be 88 days. And now the purse, this is not leveraged money. So how is the purse being calculated? It's being calculated based on what we put in, or what you put in the purse. So we put in the purse $10,000. $10,000. Now you might trade just 5,000. You might just trade 1,000. Now you might trade 100,000. I mean, it's entirely up to you. But the purse has got to be based on something. This is a new column that we didn't always have, though, but this kind of brings it in. This is the percent return that Swing Machine has garnered. That's a hard word from someone from Boston to say, garnered, since the signal. So S&P Swing Machine suggested to go long at 4 p.m. on November 8th at 437.25. And if you had done that, you would be up 16%. It is what it is. Now, this tells us trend information, which I won't take the time to get too involved with, but that's a lot of the time that we spend together when we go through Q School, and then also the fear gauge, which is very, very helpful to know when we're going to get a pullback. The center of the fairway is 510, and look where we're trading, 509.81. We're right in the middle of the fairway. Now, if you're a golfer, one of the things that they teach you, at least they taught me, was to hit away from trouble. Don't hit toward trouble. The golf designers, maybe even the designers of markets, try to get people to hit into trouble. So you don't hit toward the lake or the sand trap. You might say, well, shoot for the pen. Well, maybe, but not if there's, water close to the pen. Maybe you've got to hit away from the pen and then come back and hit to the pen. You got to play a strategic game in golf if you're going to play the game. Now, if you're going to go out and just shag balls around, that's something different. And there's a lot of people in the market out just shagging things around. So what you want to know is, what I want to know is, well, who's done the best here, and how has Swing Machine done on 500 stocks? So I'm going to show you. And here we go. I'm going to sort. Well, there's some red ones, Don. I did. I'm going to come back. See, there's the red ones. We're going to go there. The number one stock, nobody's surprise, NVIDIA. 90 days ago, Swing Machine said to get long at 457. If you were a member and you had put $10,000 into NVIDIA, you'd have another 10,000. If you put 100,000, you get 100,000. If you had done it with options, you got tens of thousands, maybe hundreds of thousands. But you know, if you're listening to CNBC and you're confused by this and confused by that and listening to all this garbage, you know, maybe you're just so overwhelmed you didn't get anything. But there are other stocks, something called NRG, Energy, up 84%. No one talks about that. AMD, 71. Now we're not going to, here's Uber up 60. Ralph Lauren. Here's Meta. Here's GE. GE, for the love of Pete, up 48%. Netflix up 48. And you would have been long all of them. All right, so let's scroll down. Any questions, let me know. So, and this is where Swing Machine, now they're long and they're dipping, so they're still long. Now those dips are not to be sold, they're to be bought. Now don't rush out and buy off of this because you don't have the discipline yet and you don't have the education on how to, and you don't have the tool from day to day to use. Now here's one, here's Tesla. Now Tesla is in the 70th position for us, about 70. It's one of the top 70 stocks, but it's been short. Swing Machine sold it short 47 days ago. You'd be up 30%. You would have sold it at 234. Now, if you can say, hey, Don, I'm not an investor, I'm not a trader, I'm an investor, no problem. But if you own shares of Tesla, you would have saved your account 30% of value if you got out of it. And then when it goes long, wherever it is goes long, you could get back in. I don't know where Tesla's going. Maybe Tesla's going to $60. You know, when you want to have that value to buy it at 60, then be sitting there holding your ass. You don't have to rely on me. You just plug this into your platform. Now you do need to have TradeStation, and you do need to have a modicum of trading experience, right? You know, so that we have a chance to go through these concepts. So we're going to keep coming down. And if you want me to stop, there's Humana, oddly enough, short too. Charter Communications hasn't been doing well for us, but on the dark side. Here's something called Iron Mountain, long 84 days, 27%, pretty nice. So you can buy and hold here, but just at least, you know, if you have maybe you have a tab and says, your name and your long holdings. And then the short stocks, you want to put the short stocks in so that you know when they come out and you get alerted to them so you know what to buy. All right, so we keep coming down. Here's Cardinal Health, up 22%. I think McKesson's kicking its ass in more ways than one, but let's see. I'm just widening this out. Now we got tools to give you much, much more in more tools, but so let's come down. I know we'll highlight and go after any that you want to see. Here's something. I don't know what this is. Oh, it's Paramount. It's been short for 28 days. 28 days. You're up 19%. All right. Now, usually when you're up more than 20% in less than 2 to 3 weeks, usually you want to hold that position. If you go into a stock and you're up 20%, it's been 30, 40, 50 days, you might want to take out your initial investment and let the rest run or use some options to protect. But, these are things and concepts that we can help you with during Q School. Here's Boeing, right? Everyone's been talking about Boeing. Is it a long? Is it a short? Well, I don't know anything really about aircraft. I don't know, but Swing Machine doesn't either. 45 days ago, Swing Machine said, get short or get out of Boeing at 222.66 at 4 p.m. on January 11th. So if you had owned Boeing, would have saved you 17%. Now, if you got your boutique broker, at Edward Jones, he's probably skiing or he's down in St. Bart's, God knows where at the mall. He's not calling you. He can't be bothered. He doesn't know what the hell. He doesn't know. He doesn't have Swing Machine. He doesn't know anything. And you're taking your life savings and entrusting it to some ass. We're not making those decisions for you. So Don't subscribe to us expecting us to make those decisions for you and to tell you what to do. We don't do it. What we do is something we think much more valuable. We're going to give you the tools, the education to use the tools, and then the rest is up to you. And we have had folks take the tools and blow us away. You know, there have been some trades I've missed, so don't hold out. But you know, so here they are. So let's keep going. You want to see all 500, so we can only be together today about an hour. So we started about a half hour ago. So we got another 30 minutes. So any questions, let me know. So here's some more shorts. But bottom line is we're still all profitable. I mean, we got a 10% return on 243 stocks, long and short, half of the S&P. And you didn't have to listen to Guy Adami and Dan Nathan. Of those two people, they too 14 karat, they're a couple of beauties, those guys. I like Jim Iorio. I like the Nigerian brothers. I do. I like them. I don't subscribe to any of them, but I like them. I follow them, so I see what they say about various things. Here's Adobe. Another short entry. It's been short for 20 days, 10%. All right, so let's scroll down. So still all profitable, all profitable. So I'm going to go real fast just to get to the nub of what you want to see. All right, so this is it. So we just showed you 428 if you take out the label row. So it's not really, remember the label row is the SPY. So there's not 429. There were 428 stocks. We're profitable in 428, give or take a stock or two, in all of those since the signal. Now the yellow ones, they're either signaling now and or they're just flat. They haven't made any money. So we can say out of 500 stocks, 444 of our signals are either at real time, 30-second delay on YouTube, real time are profitable or flat, mostly, vastly profitable. Well, what about those losers, Don? I see them down there. Yep, we're going to show them to you. And here are the losing trades. Or they're not losing, they're having a drawdown, not possible to trade without draws. But let's scroll down and we sorted. So the worst stock is ON Semiconductor, down 6%, and and that's it. That's our worst. Is Jabil. Kind of surprised with Jabil. But what you could do is here's Google, it's down. So maybe you copy the stocks that are down and put them on your watch list, put them on an hourly signal, or maybe, especially if they're longs, maybe get some call options on them because they're probably not going to stay down there. What Swing Machine is doing that is very, very difficult for humans to do, including me, and this is the experience of what went into it. And I don't know why this is the case. I've thought about it a lot, because it was a stumbling block for me back years ago. Why do people take early profits and why do people hold on to losers? Why do they do that? And I don't think it's as simple as just fear and greed. It's a big part of that. I think people kill their winners many times too soon because they want to feel good. They want to say, I made money. I won. They're chasing a winning percentage, the feel good. They also, though, which is very bad, holding on to losing trades. They're down 1,000. They're down 2,000. They're down 5,000. They're down 10,000. They wind up, it's got to come back. It can't go to zero. It can't, right? And that's what's so dangerous about this market, because all these people that are in here have no experience on this, and they will hold. They will hold all the way to zero. Studies show it. I've seen it. And I think a lot of times, though, what it is, it's fear. It's incredible fear. It's they become preoccupied with it. But I think it's more so that they're not really sure how or why of what they're doing, whether how to buy and how to sell. And when they get into a losing position, they know that if they take the loss is there. It's the money is gone. The stock is gone. It's got no chance of coming back. And then they're faced with their fears, which is, now what? Now what do I do? I might go into another stock that might do it again, and I have no idea what to do. So they do nothing. And I think that's more of it. And that's a horrible place to be. As a trader, I understand that emotion. We had to come to grips with this, years ago. We did very well. But we made plenty of mistakes. Trust me, plenty of mistakes. Lost thousands of dollars, trial and error on a lot of different things. It was not, um, you know, it was not an easy endeavor. It's become much easier because we have experience now, we have clarity, we have confidence. I can give you the tools. I can give you something more valuable than the tools, the education. But the one thing that I can't give you is confidence. And so you have to apply it and then go get it. And you can go get it. Now, the other concern is you see this, right? So this is on a daily view. You've got to become more patient. I don't want to be talking to anybody, but you've got to be more, if you got the attention span of a gnat, um, you won't get into any of these big winners. You'd be chasing the money. However, if you want to play the game quickly, there's nothing wrong with that, right? Some people speak more quickly, they walk more quickly, they play golf more quickly, and they want to trade more quickly. They don't want to sit around for 90 days and double their money with NVIDIA. They would rather be in the market trading and actively trading. Nothing wrong with that. And we have the tools to do that. But it calls for not different tools, same tools that you saw on Swing Machine, but maybe a different market and then a different discipline. And when you allocate your monies to midterm to long-term money, to intraday money, you have to wear different hats. You have to know that. So I hope that helps. Now we can do the same thing with the fear gauge we haven't addressed. We can slide over here. Yeah. And the fear gauge can tell us, if I'm going to be doing any kind of buying at all, I'd like to be, maybe going after some of these, that are in panic sell. You can see some of them are already coming up. And then the stocks that are in euphoria, these are the ones that are going to get hit. And you see these phantom vignettes, they were already in euphoria. They pulled in. That's how come, if you look at our Twitter sphere, we actually put out a tweet saying that AMD was most likely a short at 210 because it was in euphoria. So let's look at the NASDAQ. And let's slide this up. There we go. So here's the NASDAQ 100. And here's Apple, by the way. Here's Apple. It happens to be right up here. It's not the top stock, but Swing Machine went short Apple at 24 days ago. So if you're long Apple, maybe you could have sold a call against it. Maybe you sold some shares. You would have protected 8% of your portfolio. Maybe you want to own Apple. Well, don't buy it yet. Put this Apple in your watch list. And when Swing Machine goes long on a daily basis, or depending upon how fast you want to trade it on an hourly basis, maybe you get options on it. But we can come in and do the same thing. And out of 100, so this is CrowdStrike. Now, of course, if you were Nancy Pelosi, you would have been in there. But I think we even did better than Nancy. CrowdStrike went long 136 days ago. He'd be up 100%, 94% at 163. Here's the trend information, and she is pulling back. She gets down into here. That might be where you want to buy, maybe begin to buy it. Here's NVIDIA, here's AMD. So some of the same stocks. and Tesla. And let's scroll down now. So we take out the label row is 1, and then we're going to have 100. So swing machine this is the percentage of gain since the signal. You all want to know about the signal. And I'm showing you real time. I don't know what else we can possibly do. And it's amazing to me what people want to believe and see. We're up, even though you see red, that just means short, but we're up. So if you shorted Starbucks at 94, you would have made 4.29%. If you did it with puts, you would have made even more, or options. But down we come. And so here we are. We're profitable out of 89% of the stocks. We're profitable real time. These were flat, and then the last 7 or 8% we're down. But look at how much we're down. We're 6%. We got one view. You could have one view. You learn how to use the tool. You learn and understand how to interpret trends. You learn and understand how to use the fear gauge. You learn and understand how to use options. Then I say get to work, but you put your money to work, and then you cancel all your other subscriptions to the IBD and the Wall Street Journal, and take the TV, CNBC, and throw it in the pool. You never have to watch those ass clowns again. You don't have to watch Neil Cavuto, my God, on Saturday mornings, and stop it. Just stop it. So, if this is what you want to do, with your IRA monies, your midterm to long-term monies, nothing wrong with that at all. You get good with this, you get comfortable, and then, you want to trade like this, we can do it, or you can do it. We want everyone to have a fair shot. We're going to make some suggestions so that we take negative outliers off the table. We bend over backwards to make sure that you understand the risk, that we don't want anyone to get hurt, hurt bad, no negative outliers, and give themselves a shot. Now, at this point, we've had quite a few people. We have more monthly members than annual. Our retention rate on monthly is like 90%. Our retention rate on annual is about 75. I'd like to see that higher. We don't keep everybody. I'd like to, various reasons. Sometimes though, just it could be, sometimes, people, we believe what we believe, and I don't want to challenge anyone's belief systems. I can only describe what we do and why. But if a person has a fear of heights, probably don't want to, a true fear of heights, a phobia, would you encourage them to take flight lessons? Probably not, right? So we have had some folks that say that, Don, it makes me sick, physically sick, to lose a trade. That's probably not for you. As much as I'd like to help you through it and everything, you probably, it may not be the best endeavor, because you will have losing trades. We just don't want to have, we don't want to have, the scenario where someone is eating like a bird and shitting like an elephant. That's not good. But it takes time. It takes discipline, takes some patience, takes some working capital. It takes capital. So, I had an earlier career and amassed some capital. For Susie and I, life has been good. We work very, very hard, and we're opportunistic, throughout our lives. We weren't always doing this. I was, though, more or less, almost right out of college, but not in this fashion, because we didn't have the technology. And quite frankly, the financial industry was very slow to update. They're still friggin' slow, but TradeStation's superb. If I can answer any questions, I talked a little bit more there than I had thought, but I just wanted to give you a glimpse of what we're looking at today, what we're doing. Our trading is, for the most part, done for the week. We got some options that we're hatching, but If you want me to plug anything in and answer any questions, I'm going to leave the last 10 to 15 minutes to those folks that are coming by. And otherwise, then we're going to sign off and wish everyone a great trading week next week and a great weekend. Have fun. We'll be nearby. It takes some delay on YouTube. You're about 30, 40 seconds behind. If you have any questions. Now, one of the questions comes up, when we're showing you the stocks, the daily interval. You can change that, right? You could change that to 240 minutes. If you want to get inside the day, you want to jump the next guy, you want to get a little bit earlier. It's going to come a little more, a little more activity there, but you could certainly do that with the push of a button. But there's no rewriting history. Swing Machine has done what it's done the last 3 or 4 months. There's no getting back the trades from 3 or 4 months. There's only the future. So, what are you going to do? You're going to do if you're getting done with whatever it is you're doing, we're the first persons to say, keep doing it, keep repeating it. Don't have to come to us. But if you're not getting it done, you haven't reached your goals. You're not learning. That's one of the worst things too, is subscribing to somebody and not learning anything, not seeing anything new, not having any access. But that's up to you. Time, interval, we can't buy it, we can't sell it. So if you're wasting time, you're wasting money, you're wasting opportunities. We have one person in Q School. He's going to be graduating here shortly. And we have one more person ready to step right in. We won't do more than 2 at a time. So we can do 2. So we do it through a private Zoom feed, but we don't do more than 2. It's pretty individual, right? We don't do classrooms or anything. We're trying to keep it very individual, very, or just that, individual. Any questions, let us know. Now, this is, I'm seeing on the Twitter sphere, this is going to be kind of interesting. My I was going to say my friend, and I haven't met him, so I can't call him my friend. We haven't really met. We've exchanged messages, but I have the utmost respect for him. It's the gentleman Jim Iorio, and so he's on my Twitter stream, and what I like about Jim is that when he makes a suggestion, this is, I think, the sign of a pro. I could make a case for something to go up. I could make a case for something to go down, if I'm honest with myself. A professional will do that. And then from there, you calculate the risk of one or the other, and then you make your best opportunity. So this symbol is, let's see if I have this right. It's the micro Aussie dollar, but we can put in the Aussie dollar, AD. And it says here over, let's see. Well, actually, I don't know if he's maybe he's not expressing a viewpoint on it, but he's looking at the Aussie dollar. So let's look at, so I'll see something like that, like somebody's got some attention on the Aussie dollar. What are they thinking of doing? So I'll just plug it in, right? And we got these all set up. All right, so the Aussie dollar on Swing Machine, he actually on a daily basis is trying to get long 6 days ago, and he's drawing down ever so slightly. It is trending up. That would catch my eye because that's a little odd. So this person, I don't know what they're doing here. They're probably trying to get long. And I would be, so this could be an opportunity to say, well, Swing Machine has it wrong, and I'm not going to take it. Or you could say, you know what, Swing Machine has it, and but I can get a little better price than Swing Machine, and I might want to go long. And that's what I'd be looking at, without even looking at a chart. And the midpoint is 66, a coin. I could get it in here. So that's what we would do. Now we could come back and look at the Aussie dollar 3 months from now, and it could be up like $10,000, and you're like, "Whoa, I wish I could have shot that." The chances of you getting something like that without any instruction or without any hardware, without any software, is just, not realistic. I mean, you're up against, a lot of people, grown adults, men and women all over the world. Great educations, great experience, a lot of firepower, a lot of, money in the bank. And they're in all over the world. They're in London, they're in Paris, they're on some boat off of Monte Carlo, they're in Hawaii. Um, you might even be trading with Bezos. Bezos was a big trader, right? So he might, in his downtime, he might be on the back of the yacht with his trophy wife, diving off the back platform, and he's buying and selling Aussie futures contracts. I don't know. I tend to think that, those guys, once in the game, they don't want to step out. So you have to know this is the biggest, the deepest, biggest game in the world. Thank God for it. A lot of people, though, would rather us not have it. All right. It's 12:24. You got 5 or 6 minutes to ask any questions. And I hope you had fun. And it's amazing with technology. I can see too, like on our website, I can see that somebody in Augsburg, Germany, just visited our site. Oh, wow, I can see that. I can't see exactly who, but somebody in Augsburg. I didn't even know where Augsburg is. And so we get our site, Stock Market Caddy gets about, we started out as like, a couple hundred a month. We get 5, 6, 7,000 visits a month, which is great. Well, folks, we're going to sign off here shortly, and don't hesitate to visit the site. Don't hesitate to give us a call. Can be over the weekends. I'll take any phone call between the hours of 9 a.m. and 9 p.m. You're always welcome to try. And that phone number is 813-758-8263. And you're welcome to call anytime.
I see trees of green, red roses too. I see them blue for me and you. And I think to myself, what a wonderful world. I see skies of blue, clouds of white, bright blessed days, dark sacred nights, and I think to myself, what a wonderful world. The colors of the rainbow, so pretty in the skies, also on the faces of people going by. I see friends shaking hands, saying, how do you do? They're really saying, I love you. I hear babies crying. I watch them grow. They'll learn much more than I'll ever know. And I think to myself, what a wonderful world. Yes, I think to myself,